Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra. The grind down for our markets continues, but more on that in just a bit. These are the top stories at 1:30 p.m. Stocks continue to head lower after Friday's sell-off, with financials Realty leading the decline, even as FMCG proves to be resilient. The rupee also slips closer to the 80 mark after the dollar index surges.
Manappuram Finance slips lower after the management's cautious commentary tells CNBC-TV18 that demand for loans from the lower economic segment remains below pre-pandemic levels and will keep growth muted this fiscal. The company, though, says it isn't losing business to banks.
Borosil renewables slumps further as analysts say zero anti-dumping duty on Chinese imports of solar glass is a negative for the company and will increase the competition.
Adani Power surges, with the company all set to acquire DB Power's thermal power plant for 7,000 crore rupees.
Greenlam Industries jumps as commercial production at its laminate plant in Gujarat kicks off.
All right, those are the top headlines that we are tracking on Midcap Radar, and quickly taking a look at the markets, and it is not looking good. We have seen some correction from the start. It started on Friday and has continued since then. Today and right now, actually, the markets are at the day's low. It's a 225-point cut on the Nifty, and across the board, we are seeing a lot of selling. It's only some of these consumption names in the Nifty which are doing well, managing to be in the green as we speak. ITC is up 1%. We have Tata Consumer, Nestle, Britannia, HUL. These are some of the outliers in the Nifty pack which are doing well, but it is really the banking index which has taken it to the chin. So that index is down 1.9% as we speak. But we have a management with us today. Let's get straight to Green Panel Industries now. The company delivered a strong Q1 performance with debt reduction aiding profit. We have CFO V. Venkatramani, who's joining us now to discuss the earnings, fine print and the outlook going forward as well. Mr. Venkatramani, thanks a lot for joining us today. Well, before I speak to you about your business outlook and the strong performance that you actually reported in Q1, I wanted to understand what's happening with the regulatory situation when it comes to anti-dumping duty. There was an anti-dumping duty on import of plain MDF which expired on 30th March. Has there been any update on this one?
Good afternoon. No, there has not been any update. So we have stopped following up with the concerned ministries. And I think, yes, that can be ruled out for now.
The indication there, will you, do you think it will be continued? Any discussions that you've had in the past with the authorities?
No, I don't think it will be continued anymore.
Okay.
So unless some new circumstances arise, I don't think, we'll have anti-dumping duty back.
Okay, it's unlikely to get the anti-dumping duty back on plain MDF, which expired on the 30th of March. And anyway, the Q1 numbers reflect the new reality as well as the new normal. Afternoon, sir. Could you give us a sense of what FY23 is going to look like in terms of consolidated revenues? If you could break that up in terms of MDF as well as plywood. For the individual segments, what's the revenue growth and even the expectation on margins?
Good afternoon. Yeah, I think for the MDF segment, we are targeting a 10% volume growth and a 5% volume growth in the plywood segment. So this should give us a value growth of about 20% compared to FY22. Margins, I think we'll have more or less similar margins as in FY22. So not much of any significant difference. Possibly we could see a small minor improvement in the range of 50 to 100 basis points.
Okay, so 26 to 27% is what you're aiming at in terms of margins in FY23.
I think we did about 27% in FY22. That's consolidated for MDF and plywood. So I think possibly we can improve on that by a small, margin.
So you're saying a 5% volume growth that you expect in plywood and 10% in MDF. So that would mean your consolidated volume growth would just be in, high single digits. This appears to be lower than what you had earlier guided, which was, I think, 12 to 18% volume growth for the year. Have you brought down your volume growth expectations?
Yeah, we have, following the spate of interest rate increases by the US Fed and the Reserve Bank of India, we feel that will have some impact on, real estate purchases and housing loan disbursements in the current year. So we have reduced our volume growth guidance for the current year.
Okay. Thanks for that clarification. So in that case, what is happening, since you're saying you expect lower demand coming in from real estate sector generally because of the rate hike cycle that we are in, what is the outlook on capex and funding? You are planning on expanding capacity at a cost of approximately 600 crore rupees. Do you stick to that plan, and how will you be funding this capex that you have spoken about?
Okay, we will be doing it with a mix of internal accruals and debt. So possibly, 60-65% internal accrual and a 30-35% debt. So that's the funding ratio we would keep. And yes, the cost of the project is likely to be around 600 crores.
For how many years, quarters, cycles do you expect the volume growth to be muted, impacted by the macros?
Yeah, that's the reason why we have reduced our guidance. We had earlier guided for a 15 to 18% volume growth in the MDF segment and a 6 to 8% volume growth in the plywood segment. But considering the recent rate increases by the Reserve Bank, we have reduced our volume guidance.
No, so my question is that for FY23, the volume growth expectations, you've tempered it down. But now this real estate hiking cycle can impact the sentiment of real estate buyers for a period of 3 years perhaps. Do you expect volume growth to be in single digits, mid to high single digits for even FY24 or maybe even FY25? How long do you think this muted demand is going to last?
Yeah, I think it will have a short-term impact possibly for 2 or 3 quarters because it's more of a sentimental issue than any significant commercial issue. So rate increases by the Reserve Bank impact home buyers' sentiments for a couple of quarters, and then everything goes back to normal. So I don't think we'll see any significant impact beyond the current financial year.
Okay. So in that case, can you just give us a sense of what the capacity utilization is specifically in the MDF segment? The last capacity utilized was 81%. At peak levels, by when do you expect to reach those peak levels, and what is the revenue expectation as well?
Okay, so our current year capacity utilization is likely to be around 80%. And I think we should reach full capacity utilization in the next financial year.
Okay.
What about receivables, working capital? Do you expect that to come under a little more pressure than before?
Not really. We don't do business, any business which compromises our working capital terms.
Okay.
So we don't expect any impact on the working capital situation.
Mr. Venkatramani, I wanted to ask you about the plywood business, especially the decorative veneers. That's around 12% of your revenues versus earlier 8%. Do you expect this revenue share to go up? Is it a higher margin product for you?
Yeah, it's a slightly higher margin product, but growth comes in very small installments because it's a niche segment. So yes, I think we'll continue to grow in that segment. But again, considering the situation in the real estates, possibly, volume growth will be muted in the current year.
So were you planning for any price hikes in the current year? And is that now off the table, given that real estate companies?
At the moment, no. We are not looking at any price increases in Q2. I think we'll review again at the end of this quarter.
Okay. And your debt, you said in 600 crore rupees, 60% will be via internal accruals, 40% via a debt figure. So 40% would mean around 240 to 250 crore rupees for you. Generally, can you give us a guidance in terms of net debt? You aim to be net debt free by September 2022 itself. Are you on track? And with further capex, do you expect that number to go up?
Okay, we had achieved net debt free status as on 30th June, so that's already been done. And regarding net debt situation, I think by the time we complete the capital expenditure, so which should take us approximately 2 years, we should again be back to net debt free.
Okay, sir, we'll leave it at that. Thank you very much for joining in. That's Green Panel Industries. Q1 was healthy for the companies year-on-year as well as on a quarter-on-quarter basis. But the company perhaps is expecting that the high interest rates will hurt the demand from real estate, which is why they've lowered the volume guidance for the full year. Get into a break on that note. Up next, we'll connect with Rahul Sharma of JM Finance.
Well, second day running when markets are under some bit of pressure, so it's a good time to get in some technical checks on the market. Rahul Sharma of JM Financial Services is joining us now. Rahul, good afternoon. Thanks a lot for joining us. Well, the big question, of course, is will there be more sell-off from current levels, or is it a good time to buy the dips?
Yeah, I think it's just the beginning of the correction that we've seen. It's only 2 sessions, and broadly, if we see the entire move from 15,200 on the Nifty almost till 18,000, the consolidations or corrections have not lasted for more than 4 or 5 sessions. We believe it should be something similar, but the good thing is the corrections have been sharp. So we believe there is more downside to it as far as Nifty is concerned, and as far as the midcap. The Midcap 100 index is concerned, I think that sure has a bit of catching up to do on the downside. So around 30,000 is a very good level. We believe it's, we spent some time over there a few weeks back, and we believe that some bit of correction over here should make the overall index attractive. We still believe that this is only a pullback, and the entire bull run has been quite an unchallenged one. Finally, some bit of pullback correction is happening, and I think that will attract a lot of fresh money into the markets. So maybe another few 4 to 5 sessions of correction we should see, post which we should see some stability emerge back both in the Nifty as well as the mid-cap index.
What about stocks, Rahul?
Yeah, so we've identified a set of stocks, a couple of them on the bullish side, couple of them on the bearish side. Because the overall sentiment is bearish as we speak, I would start with the bearish setup. Godrej Properties is one stock which has given a breakdown today below the 1350 mark, and we believe that there is another 5 to 6% kind of a downside possibility which can be expected in Godrej. Technically, the base lies around the 1220, 1230 mark, which is where it consolidated in June, formed the base, and then we saw a rally. So around 15% shorts have been added today on the F&O side, on the futures side to be specific, and we believe that this weakness should see us extending downwards towards the 1230 mark. So one can initiate a short with the low of Friday as the stop loss. So 1355 can be the stop loss for the futures, and one can expect this bearish down move to continue. Another one that is there on the short side is the Larsen & Toubro LNTFH, which is also another candidate which has broken down its 50-day moving average. This stock may not be as severe, the fall may not be as severe as in some of the other stocks, but slowly, gradually, we believe that this stock can head towards the 68, 67 mark, which is where the previous rally began. So clearly a 50-day moving average breakdown, and today the stock has also violated the August supports that it had around the 73, 73 half zone. So this is another stock which can be shorted with 76 as the stop loss and a downside target of around 67. So these are 2 names from the mid-cap space specifically which look good on the shorting side. Something which good looks on the long side, one of them is Z Entertainment. Now this stock has been exhibiting tremendous strength in spite of the last 2 trading sessions of overall weakness that we've seen. The stock did see a cup and handle kind of a pattern breakout in the last week, and follow-up buying has emerged in the last 3 trading sessions, and that too with good volumes, especially in the cash side. We believe there are more legs to this rally, and we could see Z Entertainment heading towards the 300 mark, possibly in a month's time from here. And this stock can be bought for delivery with around a 10% with around a 240 rupees stop loss for the long positions. So
okay.
Z is something that.
All right, yeah, Rahul. Thank you so much for joining us and giving us your technical picks and trades as well. So that's all about technicals of the markets. But it's time for our segment Mid-Cap Movers. We have Sonia to take us through the mid-caps that are moving around in trade today. Sonia.
Well, thanks for that. I know this show is about mid-caps, but I thought I'll pick up one large cap that has been hitting fresh 52-week highs first up. That's ITC, because it's clearly one of the stocks of the day. Apart from that, Torrent Power is another stock hitting fresh 52-week high. And pre-call, if you remember, a couple of days ago on Midcap Radar itself, we featured pre-call. And the big triggers over there, that stock has been hitting fresh 52-week highs as well. Apart from that, all the Adani Group stocks are surging despite the fall in the market. Adani Power, Adani Green, Enterprise, Adani Total Gas, all on volume as well as price action. So looking pretty good over there. In fact, talking about volume gainers, you also have names like Campus Activewear, Affle India, which is up 3.5%, Lakshmi Machine Works, as well as Dr. Lal Path Labs, all surging both on volume and price action. On the losing end, some of these PSU banks have not been doing that well. So today too, you have you have Bank of Baroda from the PSB lot, PNB that's down 2.5%, IDFC First Bank down 2.2%, and even RBL Bank is sulking a bit down almost about 2.5%. Back to you.
Thank you very much for that. As we get into a break, here's a quick reminder for our viewer. Money Control Pro's financial freedom offer is back, and this time with added benefits. So get your Money Control Pro subscription at a net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website.
Gail. Okay, so Gail, of course, we've been talking about how fundamentals or the macros are not working for Gail now. Q1 numbers were not that great for the company, and today again it is under a bit of pressure, down 2%. Kotak Institutional Equities has written an interesting note and something that we've been highlighting. They say that company is now facing headwinds in each of its key segments. If we talk first about what is happening in the gas marketing segment, we have been talking about how Gazprom deliveries have been low, but margins on Gazprom contract were generally very high because we are talking about high oil prices. So they were actually making good margins in that particular business. So in near term, due to acute shortage of long-term LNG, GAIL will have to use spot LNG, and spot LNG prices as of today at $57 per MMBTU, record high levels for that one. And while that will impact GAIL's business and GAIL's margins, Kotak thinks that yes, GAIL will try to replace spot LNG soon with relatively cheaper long-term LNG. However, it remains to be seen by when does that happen. For 3 pipelines as well, the tariffs have been cut by 41 to 98%. Regulator has seen some changes in the board as well. So that has come as a negative surprise. That's a big cut that they've seen in tariffs. Spreads on oil linked sales of Henry Hub volumes compressed. They might turn negative soon because of how pricing has been in the US as well. So they are reiterating their sell call with a target price of 115 rupees per share. This target price is the lowest if we talk about the street estimates. So things not looking so good for GAIL as of now.
Okay, let's move on and talk about Borosil Renewables. That's sliding in trade as the competition in the solar glass industry is all set to intensify. Nigel is here with details. Nigel?
Well, bad news coming in for Borosil Renewables. I recall just in the last couple of weeks, we spoke to the management and they seem rather optimistic that this duties, this anti-dumping duties that was prevalent for their sector, well, it would continue. But on August 17th, we didn't get any notification. Now, in fact, the notification has come out that the anti-dumping duty is nil now on imported, on Chinese imports in terms of solar glass. Remember, the government had, had imposed various duties, whether it was ADD, there was some customs duty as well. So they were looking to protect the domestic industry out here, and they've been doing this all the way from 2017 itself. Now, the impact is, if that ADD is going to go out, then Chinese imports could grow up, which will increase competition, and that's what could put some pressure on the company. So that's point number one. That's where the stock is under some pressure. However, keep in mind, the solar glass market is expected to go up big time, by nearly around 3 times in the next few years. So demand is likely to be solid. But as of now, this has come as a negative for the company, and that's why it was down close to 5% earlier. Now it's down close to 3%. Back to you.
Thank you very much for that. Another stock that we're looking at is Adani Power, and this one's locked in an upper circuit of about 10%. This is after the company has agreed to acquire DB Power's thermal plant for an enterprise value which is a little more than 7,000 crore rupees. Adani Power will be paying DB Power in cash. Now, what is Adani Power buying? Well, DB Power has operates 2 into 600 megawatts of thermal power plant in the Champa district in Chhattisgarh. And this company that they're acquiring had annual revenues of 3,500 crore rupees last year. Now, Adani Power in the statement says the reason we're acquiring is because we want to expand our presence in the thermal power space in Chhattisgarh, and that's why we've gone ahead and made the proposal to acquire DB Power Plant. The street clearly likes the acquisition, and the stock has gained nearly 5%.
From IT to power, the analysis is lit, Rima. Okay, that is about Adani Power. The stock is doing well today, but the other stock which is in the green in a weak market is Team Lease. Earlier today, we spoke with Ramani Dhati of Team Lease Services on the key hiring trends playing out in staffing growth as well. Listen in.
In the beginning of the year, we have expected very high demand from manufacturing, infra and engineering industries, maybe with the back of PLI schemes and other initiatives by the government. But unfortunately, we are not seeing that much of demand on the ground within manufacturing and engineering segments. We are planning to have at least 18 to 20% headcount growth in our general staffing business this year. So this is the minimum number that we are confident. In case if there is a recovery and better numbers by the festive season in Q2 and Q3, we may close with a slightly better numbers as well.
Okay, that is Team Lease Services. Few of the gainers in a very weak market, which takes me to the markets now. Nifty continues to be under pressure. There was a minor recovery, but that again got sold into. So it's a 225-point downtick on the markets as we speak. Bank Nifty, which has again recovered a tad bit, but still it's almost a 700-point cut out there, and it's the Nifty FMCG pack that's surging in how, as Sonia mentioned, ITC at a 52-week high. So consumption stocks are really bucking the trend. So we have something like Tata Consumer Products, Nestle, Britannia, all of them are doing really well in trade today. The mid-cap side of things not looking so good. However, the advanced decline ratio is not that bad, 1:2 in favor of the declines. With that, we'll take your leave on this edition of Midcap Radar. Inside Out when we return.